Hello and welcome to Policy Watch. Let's take a quick look at the headlines this week. No change in RBI's tightening stance. Policy rates kept steady. SLR cut by 1%. Good news for investors as the Foreign Investment Promotion Board eases FDI norms for banks. P. Chidambaram returns to not block as a minor cabinet reshuffle takes place. Sushil Shinde gets the Home Ministry. India's power grids shut down for a second time in days. Restoration on a war footing. Lack of grid discipline caused it, say experts. Those were the headlines, and our guest this week will be N.R. Bhanumurthy. He's with the NIPFP. Welcome back to the show, Mr. Bhanumurthy. Before we'll just go straight into our first story, which is the RBI's, of course, that big meeting that happened early this week. Now, the Reserve Bank of India, in its first quarter monetary policy review on Tuesday, kept the repo rate unchanged at 8%. The RBI, however, did cut the statutory liquidity ratio by 1 percentage point to 23%. The central bank thus continues with its inflation-centric policy as the threat of a drought looms large over the country. Take a look. The RBI left its key lending rate unchanged for the April-June monetary policy review. The cash reserve ratio, or CRR, was also left untouched at 4.75%. However, the central bank cut the statutory liquidity ratio by 1 percentage point to 23% from 24% earlier.
Based on an assessment of the current macroeconomic situation, we have decided to keep the policy rate and the CRR unchanged. Accordingly, the repo rate stays at 8% and the CRR at 4.75%. Separately, we have decided to reduce the statutory liquidity ratio, SLR, of scheduled commercial banks from 24% to 23% of their NDTL with effect from the fortnight beginning August 11, 2012.
After the crucial RBI meet, the key policy rates stand as below. The repo rate is unchanged at 8%. The reverse repo stays at 7%. The cash reserve ratio, or CRR, stays at 4.5%. The statutory liquidity ratio, or SLR, has been cut to 23%.
The RBI has made it clear that its primary focus is to control inflation in the medium term and has warned that a rate cut at this stage would only aggravate inflationary impulses without stimulating growth.
The other big news out of Main Street was the revision in the GDP growth forecast for this fiscal year to 6.5% from 7.3% earlier, owing to a weak monsoon and a slowdown in industrial activity. The RBI has also raised its March-end headline inflation forecast to 7% from 6.5%. Governor Subbarao, who has been walking a tightrope on monetary tightening, has deftly put the onus now on the government, and there are indications that the central bank will act only when the government moves to contain the fiscal deficit by cutting food and fuel subsidies. With Rahul Kapoor, Athar Khan, RSTV. There you go. RBI, of course, keeping monetary rates steady. The rationale given by RBI, Professor Bhanumurthy, is that another rate cut at this juncture would have added to the inflationary pressures, inflationary risks. Does that RBI rationale sort of satisfy you as an economist?
Well, I think whatever the RBI measures that have been taken in the recent policy is really up to the expectations of both the market and also the economists like us. We never expected there's going to be any rate cut because very clearly there are inflation expectations building up in the economy. In addition to that, I think the bad monsoon is also must be paying very heavily on the RBI in terms of expected food price inflation. And I think it's also coinciding with the kind of trends in the international markets.
Right.
Most of the food commodity prices are really increasing, and there is some kind of a scariness that it may be going back to 2007-8 situation.
There is that fear that
Yes.
we might just regress into that period.
Yes.
It's interesting you mentioned the monsoon as well.
Yes.
The GDP growth forecasts have also been revised. I think
Right.
it's 6.5% now
Right.
from 7.3.
Right.
How big a factor did the monsoon play in those revisions as well?
I think maybe they have not really fully taken the monsoon impact In fact, 2 weeks back, I was making a projection. My model is showing 5.9%. And in fact, yesterday, Montek Singh Ahluwalia is saying it's going to be 6%. Now, you are going to see that downward revisions by most of the analysts.
Right.
And it's very clear that this year it's going to be much worse than the crisis year, that is in 2008 and 9, that growth is going to be close to 6% or maybe less than 6%.
So, the RBI also front-loaded policy by cutting 50 basis points last time over around. But since then, they've paused any monetary action. In hindsight, sir, in hindsight, do you think that that was the right decision, front-loading 50 basis points?
No, at that time, in April, I think it was in April, there was some expectation that the finance ministry or the government of India would stick to the fiscal plans that they have specified in the budget. I think there is some kind of a game theory worked out there, expecting that they thought the finance ministry would really stick to that. Maybe there, I think RBI seems to have gone out of their expectations. And maybe at that point of time, the 50 basis point cut was necessary.
Right.
But right now, it looks like if you think inside, I think that was not a really good measure right now.
Let me play the other side right now. India is ranked lowest in all BRIC countries right now, currently if we speak. Now, RBI alerted the government saying that it needs deep-rooted structural reforms, removing bottlenecks on the supply side as well, so that, and also attract investment, liberal FDI as well. Now, we all know roadblocks hamper these decisions. There is political compulsion of the government, they can't touch FDI and retail as well. But internationally, if you look at it, Brazil, China, South Korea, all of these central banks of these countries have eased rates. Do you think India, because it has different circumstances, does it have a case that we are not like other countries, we have a different set of problems, and that's why you can't really compare it to, say, Brazil or China?
No, I think I completely agree with you. I mean, we cannot really be comparing with other BRICS nations in terms of, particularly in terms of inflationary pressure. Now, whatever we are seeing right now, it's more of a suppressed inflation, which is becoming a structural kind of inflation. And we have been seeing a sustained rise in the food prices, largely because of rise in the minimum support prices, which has been pending for quite some time. So like that, actually, there are many measures which have been postponed. I would say postponed inflation, which is called suppressed inflation right now, which is coming out. And I think we cannot really compare our India's monetary policy with other countries, because in India right now, the fiscal monetary tensions are at the peak, unlike in other countries. And very clearly, the monetary policy is saying, if I don't get any kind of policy responses from the fiscal side, I'm not really going to do anything.
Last week, I was speaking to a very senior economist who also works for the government, and he said what this inflation is really largely imported inflation. We are importing this inflation because we are importing all our oil, and oil, of course, will affect it. Do you agree that this inflation could also be, like you said, suppressed inflation, but also part of it could be imported inflation?
No, well, I think to some extent, yes, imported inflation is to some extent, you're right. But if you see the oil prices, we really don't pass on whatever the price that we imported. Yes. So I think, again, even there is a suppressed inflation even in the import prices. So like, for example, now there is a huge pressure on the government to reduce the diesel subsidy, which is not really passed on to the consumers, although the international prices were going up. So I think oil prices is also part of the suppressed inflation. The imported inflation is also part of the suppressed inflation.
It's pertinent that you mentioned diesel subsidy here and fuel subsidy here. The RBI has also told the government very clearly there is an immediate need to cut subsidies, both in fertilizer and fuel.
That's right.
That is, if the government wants to achieve that 2% of GDP subsidy target. Let's assume for a moment, Professor Bhanumurthy, that the government, because of political compulsions, because of whatever the reason that they can give, cannot touch the diesel subsidy, cannot touch the fertilizer subsidy. Are there any other options that the government can actually explore to cut its deficit?
Fiscal deficit.
Fiscal deficit.
But I think right now, I don't really see any other measure. Maybe there could be some fiscal measures like GST and DTC, which again, it's not going to happen in the near future. But in the absence of other policy options, I don't really see any other way for the government other than coming down and saying that you will reduce the deficit. Otherwise, you may have to compromise on the growth. It's very clear. There is a huge trade-off between the deficit and growth for you. If you don't want to reduce the oil subsidy, you satisfy with 6% or below 6% growth.
Right, fair point. The only positive thing, Professor Bhanumurthy, that perhaps markets and industry got out of this review was the SLR cut.
Right.
And it was also a marginal cut, 1 percentage point.
Right.
Now, market wisdom suggests that while the cut will not immediately prompt banks to reduce lending rates, it will encourage them to lend more as it reduces pressure on liquidity.
Right.
Does that qualify for the market and industry, at least like a silver lining this time around?
No, I think it may not really play a big role in the short term. I think even now, if you see the bank's portfolio, it's more than 28, 29% they're holding on the SLR.
Right.
In a sense that
Even now, while the rate has been
yes,
reduced
even
23.
now. So, but maybe it gives some kind of a cushion for the banks to lend for the long term, credit. That sense, it might be some kind of a cushion for the banks. Although there is, I don't really see there's a huge demand for credit. While of course it's growing at 17%,
right?
But in future, if there's any additional demand coming up, the banks are having some cushion to lend it for the long term.
So at least that will help. That's a cushion that you're
that's
saying.
Right.
Has the governor, sir, deftly put the onus on the government right now, because he's clearly said that we cannot touch rates until and unless the government cuts its deficit, inflation goes down. Right. So has he played his card really well?
Well, I think they have been very consistent, except for that April policy where they really lost in the game. But otherwise, for the past 9 months or so, they're very clearly saying that the fiscal has to follow the monetary or monetary. There should be a perfect coordination between the fiscal and monetary in terms of achieving the targets. But I think the other bigger thing which I think we missed in the discussion is the bulging current account deficit.
Absolutely.
Which is actually playing a big role in both monetary policy decisions as well as on the fiscal policy.
Right. On that note, sir, we'll take a break right now. We'll come back with a second story after the break. Don't go anywhere. We'll talk about foreign direct investment boards easing the FDI norms for banks. That's after the break. Don't go anywhere. Keep watching Policy Watch. Welcome back. You're still watching Policy Watch now. The foreign direct investment norms for banks with an overseas presence like ICICI and HDFC are all set to be eased, with the government announcing the decision this week. The government has clarified that investments made by India's private banks that are majority foreign owned into other companies under corporate debt restructuring will now not be considered as indirect foreign investment. This comes as a positive development, as banks will now be able to invest in sectors that have caps or are banned to foreign investment. Professor Bhanumurthy, this sort of, I don't want to call it a piecemeal approach towards FDI, but last week the government cleared 14 FDI proposals. One was power sector as well as telecom sector. They were all small FDI amounts as well. This also is a move perhaps to give a signal to investors outside that, look, we're not anti-FDI, but we have constraints as well. But this particular norm that now banks will be able to, go into corporate debt restructuring, and that will be considered as FDI. How will that affect banks, first of all? Let me ask you that. Is it a positive sign for them?
No, well, I think it's definitely a positive sign for banking sector in that sense. Any kind of relaxation of any kind of norms for the banking
always
sector
makes the industry happy.
Yes, particularly the banking sector, because they are really playing in a very small comfort zone. I think this kind of norms will give them little more playing space where they can actually improve their efficiency and they can do more business than what they were doing in the past.
Right, and which is also good because they'll be treated as FDI as well.
That's right.
Now, my one more question that I wanted to ask you, this, however, doesn't really look like, even this piecemeal approach, if I'd call it that, these small little offerings of FDI to multinationals as well, this doesn't really look like it will change the government's inaction on the biggies of FDI, say retail, for example, or even aviation for that matter. it doesn't really look like the government is going to touch that anytime soon.
No, I think government is more serious. If you have seen, some time back, they did come out with the FDI in retail. I think they have their own constraints. They would like to discuss with other parties within their own group. I guess as part of the democratic process, we may need to evolve some kind of consensus. I'm hoping that in the near future, particularly when the food prices are going to go up in this drought situation, there would be some kind of consensus evolving among the political parties, so that there would be some kind of opening up of FDI, not just in aviation and retail. There could be many other places.
Others as well.
Yes.
Some people think in this country that there is only about a 5 to 6 month window that the government has if it really wants to push issues like FDI in retail, and by December that window will close. We'll be very close to the assembly elections, and then of course the general election 2014. Do you agree that the government only has about that 6 month window? Do you think it can actually also function in its last year of occupancy?
No, I would say totally they might have 6 to 8 months, except that around the state elections, they may not really have that kind of space. But I think 6 to 8 months is a big period for the government to really come out and say that we don't want to compromise on any kind of policies. We don't want to have the brand of policy paralysis and all those things.
Exactly.
I'm sure, I think now that there is a new finance minister also, we do expect that there could be some kind of a bold moves in terms of changing this perception of policy paralysis.
And I want to talk about that just a bit. Of course, we'll move that into the third story that we have this week, but that will be after the break. We'll talk about P. Chidambaram regaining access to North Block, of course. This leads us to yet another break. We'll come back and we'll have a special interview lined up for you with the ex-governor of the RBI. We are talking all things Chidambaram. Don't go anywhere. Come back. Welcome back. North Block has a new boss, and it's his third outing as finance minister. P. Chidambaram returns to his former office and takes control of the country's finances after spending close to 3 years as the home minister. These are uncertain times for the economy, and India is no longer insulated from the global slowdown that's affecting most of the world's economies. Policy Watch spoke to Bimal Jalan, ex-RBI governor, on the challenge and the challenges that the new finance minister will face. Take a look. P. Chidambaram returns to North Block for yet another innings as finance minister. And we will look at what challenges he will face in especially the country since it's going through an economic slowdown. And who better to ask than an ex-governor of the RBI, Mr. Bimal Jalan, has kindly joined us. Thank you so much, sir, for joining us. First of all, Mr. Chidambaram returning to North Block, he has a mountain of challenges in front of him. What could be the top 3 things that he could be looking at as finance minister?
No, I think the top thing is to restore confidence in our policy-making apparatus, particularly on taxation and financial issues. That is the top priority of the finance minister. There are other issues which we can talk about, but that would be the top priority. As you know, in the last few months after the last budget, there has been a lot of uncertainty, and both in regard to taxation and as well as what our position was in terms of different kinds of tax laws and tax procedures. So those are the main challenges of the finance minister today in today's context.
You mentioned investor confidence as well, getting confidence back into the investors. Of course, the issue of twin deficits right now, current account deficit as well as the fiscal deficit, are way too high for our comfort level right now.
Yeah, those are issues which are of economic importance. But I think more important than those, to my mind, and here I'm giving you a personal view, is that as a flourishing democracy, as a country with a rule of law, as a country where we have had many simplifications in our direct tax laws, indirect tax laws, But you have to make sure that people know what the laws are and what the laws will be. If you are investing in Indian economy, or if you are, doing something which involves capital, then you must know what the law are. So this retrospective amendment of an existing law which has been upheld by Supreme Court.
We're talking about GAR right now.
No, we're talking about retrospective amendment of the, taxation in respect of some units from abroad. I mean, I don't want to name those units, they are well known. But what I'm saying is not the issue whether you are right or wrong. The question is, what is the law today?
Right.
Tax law.
Right. Tax law is the most important thing on the finance minister's mind, of course. My last question, sir, of course, Mr. Chidambaram is an experienced finance minister. He was finance minister during the UF government as well, then during the UPA one as well. Do you think that he is, unlike Mr. Pranab Mukherjee, President Pranab Mukherjee now, not an old school finance minister? He is investor friendly, he is industry friendly, or so people say. What is your opinion?
You see, I think we are very fortunate in having Mr. Chidambaram back as finance minister. In the present context, there is some certain amount of uncertainty. Our growth rates are low, our inflation is high, and we can keep on passing the buck, but we need some action. Right. And it's good that we have somebody of his experience, of his past history, of the kind of things that he is able to do. I mean, not that you are always 100% right. I mean, there may be difference of views, right. But he is a person with authority. And he will exercise it to the fullest extent to put us back on track. I'm absolutely sure. So I'm very glad that he's there.
So Mr. Chidambaram is the right man for the moment right now. Thank you, Mr. Jalan, for talking to Rajya Sabha Television. That was Mr. Bimal Jalan, ex-governor of the RBI. For now, it's back to you in the studio. There you go. I spoke to Bimal Jalan just recently, and he stressed on, rather than anything else, he stressed on how retrospective amendments in our tax laws need to be, Chidambaram needs to lay down the law, so to say. And I spoke to him and I asked him whether he was talking about GAR, and he said not just GAR, but all the other retrospective tax amendments. How important do you think that's going to be on P. Chidambaram's plate?
I think more important point that Dr. Jalan was trying to make is that there needs to be more clarity on most of the tax laws that we have right now, be it GAR, or it may be retrospective tax and all those things. We have seen there's so much of noise has been made on the GAR, although this was not a new thing that has come out in the budget document. It's part of the DTC, and there was not much of discussion in the before the budget. So maybe there could be some points. I think there is a committee, standing committee, and the Prime Minister is appointed, and we look forward for the kind of recommendation that the committee is going to make. And I do expect that, as I completely agree with Dr. Jalan, that we need to have clarity on all the tax laws.
Right.
And in fact, the GST and DTC, we might get some kind of push, because Mr. Chidambaram was the person who actually initiated this.
Right.
And I'm told somewhere in the newspaper that he has actually drafted some of the laws.
Right.
So we do expect that Mr. Chidambaram would really push all these pending laws in the
Very
fiscal.
briefly, Professor, if you could, this will be my last question to you on this show today. Your personal take on how people say that Mr. Pranab Mukherjee, now President Pranab Mukherjee, was an old school finance minister, but Mr. P. Chidambaram, of course, is more hands-on. He's more decisive in some ways while dealing with industry as well. Your take on Mr. Chidambaram becoming finance minister again, you think is he the right person to take us out of this economic slowdown that we're experiencing?
I think it's not the time to really compare between Mr. Chidambaram and Mr. Pranab Mukherjee. Maybe to be fair to previous finance minister, he was not just involved only in the finance ministry. I think he was with many things.
Yeah, exactly.
But maybe Mr. Chidambaram would have more time to really spend and take a decision.
So what you're saying is Mr. Chidambaram will be a full-time finance minister.
Right.
And that's what we need
that's
right
now.
Right. On that note, we'll have to end the show today, of course. Thank you so much, Mr. Banamurthy, for joining us on Policy Watch. That was Professor N.R. Banamurthy of the NIPFP, of course, talking to us. We had three top stories today, of course. The first one was the monetary policy that the RBI, of course, came out with on Tuesday. All rates are steady right now. The RBI wants to keep it tight. Doesn't really have the room or the elbow room, as they say, to maneuver around rates. But yes, of course, SLR has been cut by 1%, of course. Like our guest today said, that in the short term, perhaps it won't make so much of a difference, but it will encourage banks to lend more. And of course, that will take pressure off the liquidity in our country. The second story of this week on Policy Watch, of course, was the easing of the norms. Investors, of course, Foreign Investment Promotion Board, that is the FIPB, has cleared the norms, and banks like ICICI, HDFC, any government bank that has ownership abroad can, of course, invest in corporate debt restructuring. That, of course, sort of that piecemeal approach that we talked about. The third story, of course, was Mr. Chidambaram coming back to North Block as finance minister. Like Governor Jalan said, like our guest today said, of course, he is the right man for the job. He has to look at retrospective tax amendments and make it clear, make the laws of the country, the tax laws of the country clear to investors, so there are no issues like the Vodafone tax issue, of course. And like Mr. Bhanumurthy said, he can be a country's full-time finance minister, and that's what the country needs this time in these times of global economic slowdown. That's all the time we have on Policy Watch this week. Till next time when we come back with another set of top economic stories, this is Athar Khan saying goodbye and thank you for watching.